Okay, let's talk about 2026. Artificial intelligence. It's not some futuristic buzzword anymore, right? It is the engine of the global economy. But what does that actually mean? What does it look like? Well, today, we're going to follow the money and see how AI is shaking up entire industries, and in some ways, you probably won't see coming.
You know, this quote from Goldman Sachs, it really just nails it. We are so far past the point of asking if AI is going to have an impact. The reality is, it's already here. It's a major force right now, shaping everything from the stock market all the way up to entire national economies.
So that's the big question for us, isn't it? What does this AI force actually look like on the ground? How does it ripple through things like supply chains and infrastructure? And maybe most importantly for a lot of you, what does it mean for how we think about investing? That's exactly what we're going to unpack today. All right, to really get a handle on those ripples, we have to start with the big picture. Let's pull back and take that 30,000-foot view. We'll see what the top market analysts are saying to get a feel for the economic climate we're all in. So, the consensus for 2026, it's actually surprisingly good. Analysts are seeing strong growth around the world. Inflation seems to be chilling out. But, and this is the big but, the most critical piece holding this entire positive outlook together, it's that sustained, just massive capital investment being poured into one thing, AI. It is literally the pillar holding the whole thing up.
Okay, so if AI investment is the engine, let's pop the hood and take a look, right? We're about to dive into the staggering amounts of money flying around and get to know the companies at the very heart of this, well, this modern-day gold rush. Just take a second and look at this number, $540 billion. That is the amount of money we expect to be spent on physical stuff. We're talking servers, buildings, the works, from just a handful of companies. We call them hyperscalers, the absolute giants of the cloud like Amazon, Google, and Microsoft. And pretty much every single penny of that is going into building the infrastructure for AI.
And hey, if that $500 billion number feels a little abstract, let's just zoom in on one of them, Amazon. In 2026 alone, Amazon is on track to spend over $150 billion. Think about that. That's one company in a single year spending more than the entire GDP of many countries, all to build out its AI firepower.
And of course, all that cash has to go somewhere, right? When you spend that much on data centers, you create this enormous hunger for the specialized chips that make AI work. So you look at a company like Broadcom, a key chip maker. Their AI revenue is projected to jump by a mind-blowing 116% in 1 year. That's not just growth, that's more than doubling their business, fueled completely by this demand.
But here's the thing. When you build a multi-trillion-dollar digital city this fast, you also paint a giant target on its back. Securing all of it, it's not just a good idea, it's absolutely non-negotiable. And that's why cybersecurity firms like Palo Alto Networks are growing just as fast. They just became the first dedicated cybersecurity company to cross a $10 billion annual revenue run rate. Security has become another massive pillar of this whole boom.
Now, this is a part of the story that I think gets missed all the time, and it's so important. While all the big names we know in the US are writing the checks, the actual physical hardware, the chips, the servers, all the components, that stuff is overwhelmingly being made somewhere else. Get this, around 70% of all the world's exports of semiconductors and AI hardware come from emerging markets. They are the hidden, absolutely essential engine powering this whole revolution.
Okay, so we've seen the money, we've seen the chips, the software, but all of this creates a huge, and I mean huge, unseen problem. See, every revolution has a cost, and for AI, that cost is measured in watts. We're talking about power. And this is, without a doubt, the single biggest challenge the AI economy is facing.
This right here, this is the real turning point in the story. All those billions and billions of dollars in servers and chips, they don't just magically turn on. They are incredibly thirsty for energy. They consume a colossal amount of it. Which leads us to a really simple but really difficult question. Where on earth is all that electricity going to come from?
This chart really just lays the problem bare, doesn't it? Just look at that huge slice of the pie for data centers. They are now one of the biggest, if not the biggest, drivers of new electricity demand on the planet. I mean, projections show their energy use is going to more than double by 2030. And to put that into perspective for you, that's like plugging the entire country of Japan into the global power grid. Just wow.
So this massive energy crunch is forcing a complete radical rethink of where we get our power. And it's leading to a comeback story for an industry that, let's be honest, a lot of people had completely written off a decade ago.
we need to talk about nuclear power.
And if you need just one perfect example that connects all these dots, this is it. You've got Microsoft, right? A leader in the AI gold rush. They need a massive, reliable, 24/7 source of clean power for their data centers. So what's their solution? A 20-year deal with Constellation Energy to get power from a reopened nuclear plant. We're talking about the famous 3 Mile Island facility. I mean, this isn't some theory. This is happening now. Big tech is turning to nuclear.
And of course, this is firing up an entire supply chain. You've got the miners like Cameco, who are digging up the uranium fuel. You've got the big-time reactor designers like GE Vernova, and even new players like NuScale. And then you have the operators like Constellation, who actually run the plants and send the power down the line. A whole industry is literally being brought back to life.
Okay, so let's recap. We've connected the dots from AI software to the chips, all the way to this surprising comeback story for nuclear energy. So now let's bring it all home. Let's talk about what this brand new interconnected market means if you're thinking about it from an investment point of view.
So when you look at investing in this new world, you really see two very different paths open up. The first one is pretty obvious, right? You can invest directly in the AI growth engine itself. We're talking the tech giants, the chip makers, the ones literally building this digital revolution. But then there's this second, much less obvious path, and that's investing in the physical world that makes it all possible. The energy producers, the infrastructure guys, and what you might call the classic stability companies that are the bedrock of the real economy.
And inside that classic stability path, you'll find this really interesting group called the Dividend Kings. Now, what are they? These are companies that are so incredibly durable, they have managed to increase their dividend payments for more than 50 years in a row. Think about that. In a world that's being completely shaken up by high growth, sometimes volatile tech, these companies represent that foundational stability, a kind of anchor that investors often look for.
So here's the bottom line, the most important takeaway from all of this. The AI revolution isn't just something happening on our screens, no way. It is having a profound physical impact on our world, from the supply chains that build things all the way to our energy grids. That link we talked about between data centers and nuclear power, that's just the first, most obvious example. Which leaves us with one final big question to think about. What's the next domino to fall? What other foundational industry is about to get completely reshaped by AI's relentless and growing demand for real-world resources?